Hello everybody and welcome to Options Paycheck Live. Today I will be reviewing the execution of our planned trades after Monday's market open. If you are new to the channel, I focus on practical option strategies to build a reliable second income. Please like this video if you find it helpful and subscribe to the channel to see my trades. Let's get started. Topics to cover today: review trade plan results, specifically for Nvidia, Tesla, and Rivian. I will update logbook with premiums and adjust open orders that were not executed. All right, let's get into it. We open the logbook and we will see what trades had been planned. So the first one was for Cleveland Cliffs, CLF planned. It was planned for 950 strike price, 3 cents premium. So let's have a look if this was executed or not. We can see that there are no options for Cleveland. Also, the price is going up. It seems it's 3% today. And so let's have a look on the option chain. Market closes in 3 minutes, right? So we can still adjust potentially. Obviously, the premium is quite low for 9.5 strike price. What I can do now is either sell for potentially 2 cents or wait if the price still goes up, and I could wait for a higher premium. The problem is the open strike price will be less and less, so potentially the price will, or the open strike price might be only for $9, and the premium will get lower, will be lower as well. So let's adjust the trade and try to do 2 cents. Modify, sell shares, and I will do 2 cents, submit, accept, and let's see whether the trade will be executed or not. So the trade has been submitted with the lower premium, and we will need to wait. So I will update logbook as well. Now it's planned for 2. Let's see whether it will be executed. GameStop. Let's have a look on GameStop. Again, strike price 33 and for 11 cents as premium. So I will have a look on GameStop options. Sorry, clicked wrong link. Obviously, when I planned the trade, I did only one option, and I want to sell two. So do I still have? Is the market still open? Let's try 59 seconds, 33 strike price, sell. Wait, no, not buy. Sell. Order. Sell one. What I can do is do market, sell order, accept, has been filled. All right, the order has been filled. So I still did within the open hours, and I can have a look now. So I have two options. If I open them, average price is 6 cents. Cost basis, so I earned $12. All right. Obviously, it's a decline. against the planned premium. Nevertheless, we are getting at least some premium. So I will put the I will lock the options as open, and maybe let's evaluate a little why it's actually less. So while there shouldn't be so much decline of the price due to the weekend and therefore theta decay, so it means when the price of options is declining with the progressing time. So the closer we are towards target date, the lower the premium is. But over the weekend, there shouldn't be so much decline because the premium is already priced in on Friday afternoon. Nevertheless, we can check we can check the chart and see if potentially the price was declining on the open, and therefore it would be reason for having the lower premium. So as we can see, the price opened more or less at the same levels as Friday close, but then the price was declining steadily, and during the day it started to go up again, and therefore the option price should be higher. It's interesting to see why this is the case. I think let me check actually what the details, because I believe that one option might be sold for a higher amount and one for lower. We don't see. Yeah, we'll need to check the activity statement for more details. I will not do that right now. Anyway, the average price is 6 cents, and so therefore, yeah, that's the average. It's less than the 11 cents. Probably it's because the second option that I opened was after the whole Monday, and therefore the theta decay, time decay, was already priced in, and it was significant impact. Right, so this was mistake on my end. I forgot, when I planned the order, I planned only for one option, and should plan actually for two options. All right, let's have a look on Rivian. So for Rivian, I don't have Rivian stock, so let's open the chart and see how the chart was moving. So the price for Rivian was actually spiking up, uh, opened higher, significantly higher, or not significantly, but opened higher than on Friday close. I thought that actually the price might be dropping a little, and so I might be having a chance really for higher premium, or potentially even buying the stock for 250. It wasn't the case, so let's have a look for how much I sold the Rivian options. So it was two options for 21 cents, and the original plan was 37 cents. However, now it's 27. So we can see it's less premium this week than originally planned for. But let me check if potentially there is more trades. So I will need to double check what trades I have open. So there's Tesla with two options, and this is what we have documented, right? Yeah, two options. Tesla. It was open from the previous week. Um, then we have Nvidia. There was only one option open for a price of $102. And I can see that I opened also another option, another covered call for strike price $115. And it was with average price or with price of 37 cents. So let me document this trade as well. I'll insert here row. It's open, it's covered call. Strike price is 115. Let me just quickly document trade 37 cents. Question you might be asking, why did I open with the strike price of $115? Where my purchase price was for 100 shares. The purchase price was $115. For another 100 shares, the purchase price was $102. I expect there might be still some volatility on the market, and so I decided for the strike price that equals the purchase price to get as much premium as possible and still not losing money if the shares will be sold. We can check the chart as well of Nvidia, how it is moving. Guys, if you have any questions, please don't hesitate and ask. I will try to answer whatever question you will have. All right. I was checking chat. There were no questions. So let's have a look on the chart. Nvidia, the price was dropping. So from previous Friday closing price, which was $110, now it opened at 109, so slightly below. Kept dropping during the day, and we will see where the price goes. Of course, the short term moves, like it's very difficult to predict. Nevertheless, let's put a visual here for 115 strike price. So the visual is somewhere here, right? So there is this line. Let's put the line. The other is 102. So we have those two lines in here. I will do the strike price is purple. No, it's not very well visible. Shall I try different color? What do you think? Shall I try green? No, it's not very good. Yellow, no, yeah, yellow, it's quite nice. Yellow, it's quite nice. So I will use yellow for strike prices. Um, and let's see. That's exciting. It is exciting to see whether the price will be moving within the range or whether I will have both options out of money and potentially the price again goes towards $95. All right. So this was for Tesla and Nvidia. The premium is captured. I will clean up. I will clean up the. I will clean up the Excel later. The important what we need to capture is premium to understand how much we are earning per week. All right. So Tesla we have discussed two options. The trade was open already from the past week. CLF, it's still open trade. Which one? What else? GameStop we have discussed, and then Rivian. So let's review Rivian. Strike price 12.50. Strike price 12.50, and the premium I got is 21 cents. So let's document this one as well. So see, it was when we planned on Sunday, we planned for 21 cents. It was executed for 21 cents. So that's nice. It went as planned. Obviously, annual return on such premium or with such premium on the capital would be 86%, which is pretty good. And we can check also the chart just to see how is it moving. So yeah, it was growing from the start, right from the start, and I can put the strike price yellow again. So this is cash covered puts. So if the price is going down and drop below the line, the options will be assigned, and I will be forced to purchase the stocks. If the price stays above the yellow line, the options will stay out of the money, and I will just collect the premium. But as I was saying last time, actually, if the price drops below the yellow line, I will just sort of repurchase the shares, because last week I sold for 12.50 when the covered calls were assigned, and so therefore buying for 12.50 would be just sort of continuation of the longer trade, where I originally bought somewhere around $11 per share. All right, so this looks good. I I'm really looking forward to verify this sort of hypothesis that there is sort of run before the earnings, and then after the earnings there might be drop. Um, I think it's there is nothing. Uh, Maybe interesting earnings, but I think the big news will be really only when the new model of Rivian will start to sell. All right, moving next. Let's have a look. So Rivian documented. Do we have anything else? Do we have any other trade that we potentially didn't cover? So Tesla we covered, Nvidia we covered, GameStop we covered as well, Rivian we covered as well. There is one thing to address. As I'm selling Rivian puts for $12.50, I still have quite significant amount of money where I can plan for more options. And so the question is, well, it is actually only 1,000 when it comes to options. So it means that I might try to sell options for Rivian. Let me just search it from here. Rivian. There will be not so much of a premium, um, but we can try this. Sell puts for 1100. Not sure if I have enough money for these. I do order limit 2 cents. Will cancel sell order. Right. I don't have enough money for this one. So I might try 1050. Yeah, well, let's try 1050. Um, if the price starts to drop, there might be good chance to sell the options. If the price will not be dropping, this will not be sold. Never mind. It's good. It's good that we use all the capital actually that we have, because the more capital we use, of course, the more premium we get, and therefore we earn um, more on the capital, and the annual return is just higher. So let's update also our profit loss. $269. So it's slightly less than what was planned on Sunday, uh, but it's not bad actually. Um, yeah. In how many weeks we are doing this? 1, 2, 3, 4, 5 weeks. We are 5 weeks in. Uh, we earned $1,700, which is 23% annual return on the capital. It's not bad. We need to consider. It's interesting also to see, how the premiums are changing, right? So when the volatility was really high, the premiums were pretty high. Then the volatility was going down a little, and now you can see there is decline really in the weekly premiums, partially because maybe I might be more careful uh, to not get assigned, or to not get assigned with our net have strike price, which would position me in the loss when selling the stocks, and therefore I might be getting or aiming for lower premiums. But it also goes down to volatility, and we can check. I don't know. Let's take Tesla for example. Tesla has 78%. I think few last week, the week before, we would see higher IV. Uh, let's check also GameStop. I think with GameStop, when we were doing the Sunday, right. So when we were planning the Sunday trades, the volatility I think was around 48% or around 50. So it's really low. Of course, nice IV is when it's around 100 or even higher, right? Then the premium is really high. This internal volatility, um, the price of premium is not so high. Right. Let me check if we have any messages in the chat, any questions. And not. I think we can review the holdings. We can review where we are right now. So Tesla. Hmm, right. Tesla price going slightly up, but it seems that there is resistance, um, that the stock just cannot get through. If the resistance holds still, then the strike price will be out of money, and therefore we will be just getting premiums. So I assume the unrealized, I mean, as of now, it's unrealized loss, but it's only because if I was about to sell, sorry, if I was about to buy the options back, which I will not do. Um, and then, I mean, this is normal. It's always because there is spread, and therefore when you open the options, you always, if the price is not moving so much, then you always end up in the um, in the loss at the beginning. um, the spread is basically the difference between sell price and buy price, purchase price. So the difference just position you to the situation where when you open the options, you immediately are in the loss. Right. So yeah, we were we were covering the the trades. I updated the logbook as well. I adjusted the orders that were pending. So that's really what I was able to do today. Um, I don't think there is anything else I want to do. So I think, guys, it's really it's that's it for today. Um, I might reconnect again this week to show if there is any dramatic moment on the market. So I will reconnect and we will discuss and we will potentially adjust the trades. But if the situation remains calm, I will only connect again back on Sunday. And so next Sunday, I will connect for another live trade planning session. And yeah, don't forget to subscribe to my channel. Don't forget to like the video. And see you until next time. Bye bye.